get a closer look on China and Chinese shares with a man who operates a fund that's up 8% on the year. Aaron Boesky, founder and CEO of Marco Polo Pure Asset Management, joins us on the program. Good to see you once again. So, Aaron, I guess people are just wondering, when are the stimulus taps going to be turned on?
It's a great question. We believe that China's setting up for the new presidency, Xi Jinping. It's the first time China's going to have a new president in the last 10 years, so it is a major transformation for the government. We're going to have a new president, new premier, almost entirely new Politburo.
Basically, is what you're saying.
Yeah. Well, I mean, right now, Chinese interest rates are juxtaposition to the United States in a much different position. We're at about 6% interest rates in China, with the United States at about a quarter. So China has tremendous amount of monetary firepower to spend, which they haven't yet. We've had GDP dropping 5 quarters in a row in China, yet we haven't had a single interest rate decrease in China. So what are they holding out for? Our belief is that they're holding out to make Xi Jinping, who comes into the presidency at the end of this year, let him be the hero, let him drop rates.
That's an interesting theory, Aaron. Some are saying also that they decided to keep interest rates where they are because if you cut them, then you're into this negative interest rate cycle where inflation, where it was above like 4%, would be higher than borrowing costs. Yeah.
Inflation's an interesting consideration, but we've come down from 7% inflation 2 years ago to about 3 and change right now. 3% inflation is about as low as you're going to get in an economy growing at 7.5%, 8% a year. So I'd say
it's not higher, really, actually.
Inflation is bottom. So at this point, they have all the maneuverability they could ever ask for to drop rates, yet they're holding off. So.
Aaron, I guess on earlier was saying that, okay, everybody's already been quiet about the stimulus things because they're all talking behind the scenes of doing it all in one go. Concerted action involving ECB, the Fed, Bank of England, also, of course, the PBOC. Now, what do you make of that?
I just don't know where the West, ECB, United States, and Japan are going to get their stimulus. Rates in all of those territories are already at zero. Japan's at zero. The U.S. is effectively at zero. Europe's near zero. They've spent their monetary firepower, so to speak, and China has got a lot of bullets to fire yet.
Yet, and we're waiting, right?
Yeah.
But the ECB, Mario Draghi, indicated that they could cut interest rates further because it is at 1%. They could cut it maybe half a point, get some borrowing and some liquidity through once again. But you know, I should point out that Credit Suisse talked about an actual number in terms of the amount of stimulus we might get, $315 billion. Is that in line with your expectations, somewhere along those lines?
I'm looking more at China, but I would say another interesting...
That's what it means, $315 billion for a stimulus package.
Oh, I think it's going to be significantly higher when you factor in RRR and interest rate drops. I mean, and velocity of money. I mean, the multiplier could have tremendous effects. But another interesting thing is fiscal and tax. In the United States, Japan, and Europe, they're going through austerity. I mean, in the United States, you have Tea Party. In Europe, you have austerity as a big movement. In China, it is, again, juxtaposition opposite. China now is increasing fiscal spending dramatically. You're talking 20 to 30% year-over-year increases in fiscal spending, huge tax cuts which went into effect this month and last month in China, which are going to filter into the economy over the next few months. I think we're going to be looking very healthy coming into the new president.
You know, there's a lot of views as to how much further Chinese shares can gain. You heard Goldman Sachs saying 15% to year's end. What are your thoughts?
Well, they could gain a lot further. We're at next to all-time low valuations on PE and PB. We're at about an 11 on PE. That's down from about a 60 PE in 2007.
That's right.
I mean, we could re-rate to a 20 PE and still be well below historical averages. That's 100% gain.
They say cheap for a reason, though, Aaron. You know, there's a lot of risk out there, and also with what the government's been doing, which is turning off the taps at this point. So that's why we have these lower multiples. But let me ask you, what have you been investing in China?
We're focused on non-bank financials, securities companies. In particular, we expect a bull market to return under the new president at the end of the year, so we love securities companies. Volumes have been more than double last year for the first 6 months of this year, 5 months. We like energy, specifically natural gas and alternative energies, not coal or oil. We like environmental protection. The government's looking to spend a large amount fiscally this year, and I think that environmental cleanup initiatives are
Even though they told foreign embassies to not report on air pollution in Shanghai or Beijing.
I think it just shows that they're focused on it.
Yeah, I just want to talk to you about fund flows quickly because we were talking about how basically the developed markets funds were taking their money, especially in times of volatility, out of Asia. Have you seen that or noticed that at all?
Speaking about fund flows, in China it's a bit of a different story because foreign participation in the Shanghai market is less than 1% right now, so it's all domestic. In the domestic market, they're now allowing pension funds later this year. They're testing it now with the Guangdong Pension Fund, but pension funds in China are going to be allowed into the stock market for the first time.
Right.
So it's a huge structural reform.
Right,
oh yeah, we're talking $60 to $80 billion U.S. in fund flows, probably by the end of the year.
Because unlike in the U.S., which is dominated by pension fund money, I mean, China doesn't have that really that much right now.
Yeah, we don't really have an institutional market right now.
Is it still retail investors that make up the majority?
Well, mutual funds, which are also considered, I guess, retail, but you're talking 70% of trading volume is retail, and pension funds are not allowed at all to invest in stocks yet.
There's been a change in attitude, isn't there? I think people got their fingers so burnt a few years ago that there's a real reluctance to start playing around in the stock market, isn't there?
That's actually changed this year. Trading volumes are double in the first 5 months of this year of what they were last year.
And brokerage accounts are being open?
Yeah, that's in tandem.
And is it soon going to be easier?
But there's still that psyche. It's been damaged. I mean, the thing is, maybe we'll get more of a mature approach in the future.
It's been 4 years since the crash, so I think that enough water's under the bridge at this point where retail investors are getting their feet back in the water.
Yeah, it's not only in China because you're hearing that in developed markets as well. Yeah, I mean, take a look at TD Ameritrade, which is the whole business on retail investing. They're not seeing much volume still.
Well, we also have the Guoshu Qing, who's the head of the stock exchange regulator, who's allowing pension funds to come into the market. He's also expanding the foreign limit of participation from 20 billion to 80 billion. So 60 billion more in foreign money is going to be allowed into the Shanghai market at the same time that pension funds are also going to be allowed into the market. So combined, you're talking about 120 billion of new fund flows expected in the next 8 to 12 months into the Shanghai, and that's a float. Current float's about $1.5 trillion, so it's about an 8% bid is going to hit the market. That's a very sizable.
Or 8% outflow when things go bad. Yeah, when does this happen?
Well, they can't take it out because they're not in currently. So this would be the initial buy-in of the pension funds and foreign investors. So
we were talking about hedge fund strategies this morning, David. You were covering that story, talking about how hedge funds have how much have they lost in the sell-off?
Well, the worst month was in May so far this year, and surprisingly, the long-short funds did actually the worst. You would imagine they actually timed the markets properly in May. And,
as Aaron can tell you,
the market is very timing's hard, but I think the market says a lot. The Shanghai market's one of the only markets in the world that are truly up this year, and I think that says a lot about
Aaron,
what we're looking at going forward.
You mentioned that we get interest rate cuts and when we have the new king arrive on do we also get an equity bounce as well when that happens too? You guys are president, king, head of state.
The Shanghai market is dominated by Chinese investors. Again, it's 99% owned by Chinese. And this is the first new president that China's had in 10 years. So we're talking about huge speeches.
And you're confident it is going to be him, yeah?
Xi Jinping?
Yeah.
I would say to a 99% degree of certainty.
The premier, some are saying the premier is still kind of iffy.
It could be Li Keqiang, it could be Mr. Wang.
Probably not going to be Boesky though.
No, not Boesky.
I think he's already been excised from the...
I didn't know that.
Anyway, so I wanted you to tell Rish, because Rish says, what you were saying yesterday, how you don't think it's going to make a difference
no, I didn't say that.
In terms of who comes in.
Somebody else said that.
Okay, someone else said that in the all-in discussion,
about
saying that it doesn't matter who comes in to lead the Communist Party because they're all going to go along the same track anyway.
No, I don't think that that's true at all. I think that it's more of who they're choosing is a statement of where they're going. And Xi Jinping was governor of Fujian province, which is known to be one of the most private business-oriented economies in China. Hu Jintao, the outgoing president, he was governor for 10 years of Tibet, which is not a very private economy. That's a very diplomatic, military-type situation. Right. So I think the tone of the new party that's going to be emerge in this new Chinese handover, which is going to replace almost all the major government posts, is going to be much more pro-business and much more towards privatization.
Well, you prove your worth of the hardest assignments. That's usually the rule and the mantra in the Communist Party. But I'm just asking for Marco Polo itself. I mean, have you seen redemption so far during the 6-week sell-off that we've seen across global markets?
We were up last month. I mean, we're doing well at Marco Polo.
Stay in cash.
No, we're 100% allocated.
Yeah, I'm just
we think the market's bottomed, and we were up while the rest of the world was down. The Shanghai was down as well, and we were outperforming.
So how do you do that?
Just picking the right sectors. The Shanghai market is very sector-driven, and if you're in the right places, you can avoid.
And you're lucky to be in a market that's actually up on the year as well, which you can't say for many other markets around the world. Aaron, good to see you.
Okay.
Thank you so
Thanks,
much.
Susan.
Aaron Boesky there of Marco Polo Pure Asset Management. Right.